Welcome back to Milwaukee Market Updates. We're covering real estate news and data, breaking it down to help you understand how it impacts your real estate decisions. Teaser: how good of a deal is a 50-year mortgage?
Let's find out, Ty. What to take away this episode? We're breaking down the 50-year mortgage. What is the true cost of it? Does it make sense for you? And how's it going to affect you? And then we are diving into the stats. October stats just came off. They're hot off the press. We're
Big
diving
news.
into here with what's going on in Milwaukee.
Absolutely. We're giving you the info you need to make the right decisions regarding your real estate. Should I buy a home now? Should I be selling? Is the housing market about to crash? Are these headlines I'm reading, content I'm seeing on social media true or even relevant to me? If you're new to the show or return because you found value in our previous episodes, please take a second to subscribe now. This helps us reach more people who need this information. You can follow both of us and reach out on Instagram, Horizon Homes MKE, or homewithhorizon.com.
Awesome. And this episode is brought to you by Venture Title. Venture Title is one of the best title and closing services here in the greater metro area. Reach out to them at orders@venturetitle.wisconsin.com, orders at venturetitle.wi.com. They do a phenomenal job and can't recommend them enough.
Awesome. I'm Ty
I'm Nick.
with Compass, your local real estate experts.
All right, Ty, what's going on, man? How are you?
I'm good, dude.
Yeah.
Happy November.
Happy November, dude. Welcome back. Another week here in the pod. Um, it's crazy, dude. I don't know. We recorded this last week, I think, but I feel like the whole daylight savings time thing is starting to hit me. We're officially in winter. I was in Minneapolis this last weekend. My younger sister just celebrated her birthday. Went to a Vikings game, and Minneapolis a little bit further north than Milwaukee, but all of a sudden it is 25 degrees. We're in parkas.
Yeah.
It's snowing. Come back here, same thing. So yeah, man, fall is upon us, winter is upon us, and we're going to talk about some data here to kind of show what you guys can expect looking into the winter months here.
Yeah, it feels like we've been doing a lot of data recently, and let me tell you what, you don't want to miss this one. There's so much that has changed. And yes, I'm being a little bit facetious there because no, it's kind of status quo, which is a good thing for both, I think, buyers that want to plan for next year, but then also for sellers that are considering waiting until the spring season of like, am I going to have the bottom fall out of me? But
Yeah,
we'll
I
dive
think
into that for sure.
it's the one thing about Milwaukee, it's very predictable. I would say it's very stable in the sense that almost every month has been something that we could probably predict to be correct within 1 to 2%. And I think that is the one nice thing about Milwaukee is it's very, very stable, predictable, which I think is what people want when they're looking to buy or sell their house. They want to know generally what's going to happen. They want to know if they're going to buy their house. What's that going to mean for me 2, 3 years from now? If I want to sell my house, what's that also going to mean? And so I think that is the one upside. I know a lot of the data we say, and when we do these kind of episodes where we're looking at the last month, it's kind of like Groundhog's Day where not much has changed, but that's also really nice because
Yeah.
not much has changed.
Yeah, because I mean, it was super challenging in like a COVID environment of saying like, I don't know what's going to happen next year, or if you're going to have your job, or this, that, the other. Like, having all of the inputs makes everything just a little bit easier for the consumers that are out there.
Yeah, for sure. Well, let's start not data related. I think we got to dive into mortgage news here
Yeah,
because I think if you have been in the real estate market or not, if you have a computer, if you have a smartphone, you've probably seen the headline 50-year mortgages,
yeah,
right?
yeah,
Are
yeah.
those coming? Is that happening?
Apparently, and it's supposedly going to help affordability. And I'm saying that again a little bit facetiously overall. And I think that's something we should unpack because I don't know that there's many consumers out there that ran the math on just a 30-year mortgage in general, other than the surface level of just the monthly payment, principal and interest. I think we should unpack this a little bit of like what's a 30-year mortgage look like and what's that actual total cost of a loan and compare it to a 50-year that's potentially on the table now.
Yeah, let's dive into all of this because I think Trump essentially introduced an idea to tackle home affordability, a 50-year mortgage loan. So it was more something that kind of what I've seen, it sounds like it's off the cuff idea he had. His proposals kind of light on details, but essentially the whole goal behind this is to make buying a home more affordable.
Yep.
Which I think we can all agree is something that we need is more affordability in the housing space right now.
Definitely.
You just look at where home prices have gone compared to wages, compared to just the cost of living. Cost of living has outpaced wages, and anything that we can do to create affordability is generally going to help us as people and as a society and an economy. And so let's talk about this because it's been
Mhm.
kind of a hot button issue. A 50-year mortgage. The standard right now that most people use is a 30-year fixed mortgage. That's kind of when you think about buying a home, almost like guaranteed, kind of just what you're going to get is a 30-year mortgage. There's 15-year mortgages, there's different variable mortgages, but kind of the plain Jane peanut butter jelly sandwich of a mortgage is a 30-year fixed mortgage.
Yep.
And so 50-year mortgage, what that would do is it would,
Yes. Increase the number of years that you have until it's paid off.
which in theory means that if you have longer to pay off that mortgage, your monthly payments should be lower. And I think we got to kind of run some scenarios here side by side of just comparing what does this actually look like?
Mhm.
And is this something you should explore? Is it something that is really going to make an impact or not?
Yeah.
What do you think, man? How should we kind of tackle all this here?
I know that like essentially one thing you can do is go to a bunch of different websites like bankrate.com, and honestly what you want to pull up is like a uh, loan calculator, and there's some of these special ones out there that isn't just saying enter in your purchase price, your down payment, and it picks, kicks out essentially your principal, interest, taxes, insurance, but an actual amortization schedule, because that's actually what we're really talking at the end of the day of a 30-year versus 50-year mortgage is how many years is your principal and interest payments spread out over, and it's going to have a meaningful impact on the total cost of your loan. So I know that you did a little bit of research here in terms of some examples
Yeah.
of maybe just like the typical mortgage you'd see today, which is that peanut butter and jelly, as you said, 30-year mortgage for like the typical home here in Milwaukee.
Yeah. So let's just say I'm just on calculator.net. Really nice tool, really easy just to kind of compare loan amounts, terms, interest rates. Let's just start here with a $350,000 loan amount. So this isn't assuming you're doing 5 or 25% down. This is just you have a $350,000 balance on a mortgage, repaying that over 30 years. Let's just do an interest rate of 6.5.
Yep,
You've got
that's fair
good
for today.
credit.
Yeah.
That's kind of where rates are kind of falling today, maybe a little bit better. Um, so 350K, 30-year fixed, 6.5% interest rate, monthly payment of 2,200 and change.
Mhm.
So looking at 2,200 bucks there.
Yeah.
Let's look at this same scenario. Instead of 30 years, we're looking at 50 years. So 350K, 50-year payment, 6.5% interest rate. Instead of 2,200, we're looking at 1973. We can kind of round that up to 2,000 just to make some even numbers. You're looking at relief monthly of about 200 bucks at
Okay.
this.
Yeah.
Um,
I mean, and I think we've talked about this before from an interest rate perspective of $200 per month. I mean, that's like 1 to 2 weeks of groceries, depending on your household. So let's even just say 1 week. Like that's meaningful. Like
mhm.
it's not nothing.
Yeah, like that's something that's going to help from a cash flow perspective, from an in and out perspective. Let's look at, I think, so I'll just, if we stop there, yeah, makes a lot of sense. You're going to pay less every month. But let's kind of look at the big picture here. Looking at the 30-year option, your total amount that you're going to be paying is about $800,000. So if you're looking at a $350,000 mortgage over 30 years, you're paying 800K over the lifespan because you've got about 450K of that that's just going right to interest.
Yep.
Um, so 800K total cost.
Yep.
Let's look at now a 50-year term. You're looking at about 1.2 million in total repayment. It's a difference in interest of almost double,
Yep.
from 445,000 to 833,000.
Yep.
You're going from 800K of a lifetime payment to 1.2, which is what, help me out here, 400 grand.
Yeah. 400 easy.
So
Yep.
you're basically paying an additional $400,000 towards interest over 30 years versus 50 years.
You're essentially, because of the interest and the extension of that period, you're buying that house twice over the course of 50 years. Like,
Yeah.
and there's a big reason why people, when rates go from maybe where they are today at 6.5%, if all of a sudden rates go down to 4%, a lot of people will try to refinance into that 4% rate, but not only take their 30-year peanut butter and jelly, term, they'll actually try to keep the same payment that they're already used to and force it into a 15-year to pay down faster, because I think that would actually be a really cool kind of scenario if you want to plug into the calculator of what's the actual inverse. Instead of going longer because of this affordability issue, what if in the future we got some relief on some interest rates? Like, how much do you actually save on a 15-year versus a 30-year mortgage?
So let's do,
Mhm.
if we do a 15-year mortgage,
Mhm.
350K mortgage amount, 15 years, 6.5%. your total amount repaid is about $550,000. So 550 at 15 years, 800 at 30 years, 1.2 at 50 years. So you can see that there's a vast difference in the total amount that you're paying going from a 15 to a 30 to a 50 because you just have fewer time to pay off interest and that interest isn't accruing and building. Um, but it brings up a really good point as far as, and then also if your loan amount is larger, like let's a $1 million loan versus 350, the difference in your monthly payment you're going to see from a 30 years to a 50 years is going to be a lot greater than the $200 a month we're seeing at the 350K loan amount.
Yeah.
So just keep that in mind that this is just one scenario kind of for a more average Milwaukee home, if you will. But it's people I think are kind of getting up in arms of this is awful, this is horrible. Some people are saying I don't think I've seen anyone say that this is great.
Mhm.
Um, and I would tend to agree with kind of what people are saying, where on paper, just looking at a monthly cash flow perspective, it's better. But if you're looking at this from a true net worth, financial viability perspective, it's not good.
Mhm.
Um, but also there are scenarios where maybe this does make sense, where you enter into this and then you do a refinance when rates go lower and you refi into a 30-year mortgage
Yeah.
where your payment is now still the same.
Yep.
Like there are maybe some scenarios where this could work, but I think then you're kind of banking on interest rates going down, which are they going to go down? Probably.
Over the next 50 years,
I would
I bet there's
hope
1 year
I
that
would
there'll be some
hope they're
lower
going to go
rates.
down.
At one point in the next 50 years, I'll make that bold prediction. Probably will go lower than 6.5%.
Yeah, and so there's
But is it going to be 30 years or 40 years from now? That's the
right, we
question.
don't know.
Yeah.
And so I think it's really hard to say. I think that it probably doesn't make sense for most people to go into a 50-year mortgage, is
Yeah.
what I would say. Um, it kind
And
of reminds me of I see these on TikTok and Instagram, people that are buying cars that are putting 10-year loans on cars. And it's the same idea of you're buying a $30,000 car over 10 years, you're paying $150,000. Like that financially doesn't make sense. Granted, cars versus homes are totally different types of asset classes where a home is going to typically appreciate over time. A car is typically not going to appreciate over time.
yeah.
But still, it's there's a lot to unpack here. And I would say generally it probably doesn't make sense to
Mhm.
do a 50-year mortgage.
Yeah, and through talking to other mortgage people that are out here in our industry too, you just ran a scenario here that is essentially saying we're just going to assume the interest rate's going to be the exact same for a 30-year mortgage versus a 50-year mortgage.
Mhm.
But in all reality, actually, usually the rate that you'll get on a 15-year is going to be lower than a 30-year, which means you'll probably see higher interest rates on 50-year mortgages versus 30-year. Let's just even assume a 7%. We already talked there's a $400 to $450,000 premium to getting that 50-year mortgage. It's actually probably even higher than that. I don't know what the number kicked out. What is it, closer to 500 to $500,000 plus in terms of the difference between
Yeah.
the
So if we're
two?
looking at a 30-year with a 6.5% interest rate, because you're right, I
Yeah,
expect your interest rate's going to be higher with a 50-year
yeah.
mortgage. Your monthly payment goes from 22 to 2,100 a month.
Mhm.
Your total repayment amount goes from 800K to just over 1.2, 1.3 million. So you're seeing an additional about $100,000 with a higher interest rate over the lifetime of the mortgage. Now, here's what I would question you, Ty.
Mhm.
I'm a home buyer. I am looking to buy something that I'm going to live in for 4 years, 4 or 5 years. And it's a first time house that I'm buying. I just need a 3 bed, 1 bath for my family. Once we have kids, we're going to buy something that's 5 bed, 2.5 bath.
Mhm.
Would this make sense for me?
I'm a little bit concerned about that. And I think actually what you're kind of leading us into here is one thing where people don't do one click lower is what's the total cost of this loan I'm doing over the time I'm taking it out, whether 30 years or 50 years. The second one is when am I actually building equity? Because sometimes people just assume that whole, $2,100 payment is just going towards my ownership in the home. Typically, what you'll find is a very small percentage of the total payment you make is only going towards the principal. A larger portion of it is going towards the interest payments. So if you look at a 4-year time frame, the longer that your mortgage is, the less you're actually going to have paid down and built in equity over that time period. So this is actually going again into the amortization schedule of what is the actual principal pay down for our first scenario, 350K, 30-year at 6.5% versus that 50-year mortgage. What's the total principal pay down that we've done over 4 years for the two scenarios?
Yeah. So let's do 10 years. How about
Okay.
that? Let's do 10 because that's a little bit easier number. It's a little bit, I think, going to give us better results to kind of paint what you're after here.
Yeah.
That's fair.
Yeah.
So I'm going to sell this house in 10 years. Um, Typical option, peanut butter jelly time, 30-year mortgage, right?
Mhm.
After 10 years, I've paid off about $50,000 of my mortgage balance.
Great.
All
So
right.
that's principal, that's equity you now have, not considering appreciation.
Absolutely.
Yep.
Let's look at the 50-year option. Should we do this at 7% or should we do 6.5? Keep it plain.
Keep it plain. I mean, let's assume best case scenario, which it's
All
probably
right.
not going to be.
Oh, 65% interest. That's not right.
That's not
All
good.
right. So option, let's recap here.
Yep.
After 10 years of a 30-year mortgage, you've paid off about 50 grand of
Great.
your principal.
Cool.
Cool. So 50 grand. After 10 years in your 50-year option, you've paid off about
13.
13. Is that, am I reading that right?
I'm reading that right. It looks pretty bad.
Yeah. So you're looking at a difference of what would that be? 30
Yeah, about
K change?
yeah, 27 like a what $27,000 difference in net worth just basically based on you trying to save $100 per month.
Yeah.
Yeah, and that's I think that is the question, and what I'm more concerned about is even that 3-year time frame here of you've only got 4,000 in equity in the 50-year option versus if we go to the 30-year option, it's like 13K. You've got triple the amount of equity by year 3. That gives you more options in the case of that move up home owner where like I bought that 3-bed 1 bath and I've now outgrown it. I'm a little bit concerned that essentially, if we don't keep up the same rate of appreciation in our Milwaukee area, you've only built up 4K of equity with that 50-year loan. Like you might not actually be able to do the next down payment because you may need to sell your home in order to buy the next. We've talked about that scenario a lot. You're not building equity fast enough to actually go do that move up home. So this maybe is where like, hey, do I buy the $350,000 home or do I make a stretch to the $450,000 home and do the 50-year because I know this is a longer term home? But doing the 50-year mortgage gives you less options. It gives you less flexibility as you look at year 5, year 10.
Yeah. I think that's very well said. So I think the time of 50-year mortgage could work is if you know someone at the Federal Reserve and they tell you that rates are going to go down for sure.
Yeah.
That might make sense.
Yeah. Perfect. Okay.
Um,
Insider trading,
yeah,
scenario 1.
but like, do you see a time where like it does make sense?
I mean, if I want to speak to maybe some of our like house hacker clients out there,
Hmm.
which like that theory of that is essentially, can I buy an asset for 3.5% or 5% down because I live in one side of the duplex and rent out the other? And you're actually just keeping your housing costs lower and investing the difference maybe in the stock market or 401k. Typically when we move out of the house hack investment, we want the two renters to be covering above and beyond the principal, interest, taxes, insurance.
Hmm.
Well, in that case, your tenants are actually paying down that mortgage for you, but it's just not going to be at a faster rate. So that might be one scenario. I'd actually have to chew it on a little bit more, but
Yeah.
if you can afford the 30-year, I think in general, you should do the 30-year.
Yeah.
That
Definitely.
that'd be the only piece I would say is like, if you can increase leverage in a real estate investment, that might be the only situation where it makes sense because now you've got exposure to that $350,000 purchase appreciating at the value over time, which is probably going to make you more money faster than potentially paying down the mortgage. That would maybe be the only use case.
Yeah.
And that's a very small
Very
percentage
small
of the people
portion.
that are
Yeah.
out there is I'm buying a investment and I've ran the math over the course of 30 years and I like this. And maybe at some point in the future, again, the equity that you're building is not as fast though. So you're not going to be
It's
able to
hard.
refinance
Yep.
and, recapitalize that in the future. So I'm still a little bit nervous about even that recommendation.
Okay, how about this? Someone says, "Hey Ty, we want to buy this house. From a debt to income perspective, it's super tight for us, but if we do a 50-year mortgage, it'll work for us."
I'm still nervous. It's like, can you wait like 6 months or a year and get to the point where you can? Because our number one rule that we talk about all the time is any time can be the right time to buy the next home, but only if it's the right home and you can afford it. And if this is kind of telling you at that traditional 30-year mortgage that you can't, like potentially pump the brakes and like reconsider.
Yeah, I agree.
That's
I
that. Oh,
agree.
that like that's my gut. That my gut's telling me, nah, everybody, yeah, everybody get a 50-year,
100-year
100
mortgages. You get a
years.
mortgage.
Yeah, and this actually kind of somewhat work is how it works in Canada because they don't have fixed rate mortgages. When interest rates change up in Canada, they don't essentially raise your monthly payment. They re-amortize the loan at the same monthly payment. So if you have paid it down for 5 years and then interest rates go up 2%, they just increase the length of your your term and your amortization based on the new higher interest rate.
Crazy.
So you have that 30-year mortgage, that's a variable rate. You're still going to pay it off. You're actually going to pay it off in a longer period of time. So it's the exact opposite of what we're talking here today of
Interesting.
rate volatility changing the length of time it will take you to own your home free and clear.
Yeah.
Yeah, super interesting. But so we just got real deep in the numbers there, which we love to do, especially on podcasts. But
Yeah.
not only do we have those numbers, we have additional because we've got the October 2025 stats for the Milwaukee greater area.
We sure do, man. We sure do. Should we dive into this here?
Let's dive
This
in.
is hot off the press.
Hot off the press. It
We were
literally came in our
sitting in
email this
our in
morning.
the yeah, it's sitting out there this morning. Stats come in, breaking news. So you know what? Kind of changing things up here, and we're like, we got to talk about this. We got to be timely with this. So let's dive in, man.
Yep, let's do it. And honestly, I know everyone's going to be super excited because next month, when the stats come out, we're going to be looking at our next year projections. And then January is going to bring back our recap of how did we do for 2025. So all of a sudden, we're wrapping up another year of the Milwaukee real estate market update.
Been insane, man. Been a quick year.
Okay, so let's dive in. October 2025 here in the four-county area of Milwaukee, Wisconsin. New listings, 1,850 new listings, up 3%. That's right in line with the trend we've seen all year. Pending sales, 350, down 14%. So a pretty big decline in terms of the number of homes that went under contract last month. Closed sales, 1,350, up 1%. So very much in line with the new listing activity we've been seeing. Days on market until sale, 23 days, up 1 day versus a year ago. Again, that's right in line with our average for the whole year. Median sales price, $370,000, up 6.5%. Again, very much in line with our last 10 months trend. Average sales price, $437,000, up 9.5%. Percent of original list price received, or that percent above or below asking, 98.9, which is essentially comparable to a year ago at the same time in October. Last two stats as we get to the inventory component. Inventory of homes, 3,200 homes available for sale right now, which is up 4% versus a year ago. Still at all-time lows of inventory here in the Milwaukee area. And months of supply, 2.3 months, which is the exact same essentially as we had a year ago. Still sitting squarely inside of a seller's market, even in the holiday season that we're fast approaching.
Yeah. I think the biggest things that I see here, listings are up about 3.5% from how many listings we had this year to last year. Also, just looking at October this year to last year. Pending sales are down quite a bit, 14%. I think when I look at this, as a buyer, you probably have the best opportunity you've had all year to find something juicy, to find that home that maybe would have had 7 or 8 offers, now maybe has 1 or 2.
Yeah.
That home that you maybe would have had to waive a lot of contingencies, you now may be able to have a lot of contingencies. And that's just the seasonality. When I see a lot of when I see listings holding flat, pending sales going down, it means you have a lot of inventory out there that has not gone under contract. That's going to be available for you as a buyer to look at. So that I would say is, if you're still looking to buy a home, you're probably going to have fewer good options as compared to when you were looking in the spring or summertime, but you're probably going to be able to have a better ability to make something work for you here.
Yeah, I would totally agree on those points. And like, in all honesty, if you actually look at our inventory right now, if you look at like month over month this year, we're actually seeing inventory go up a little bit versus usually you kind of see it fall off the cliff at this point of the year. So we've remained steady, let's say about 4-5 months in a row now at about 3,000 listings available. That's just because we've had, listings outpace the number that go under contract. That is a little bit different than what we typically see this time of the year. However, at the same time, we're still at a pretty low point versus like where we would typically have started the year in inventory based on 2019 and before. Usually we'd start around somewhere closer to like 3,500 to 4,000 listings to start in January each year. So
Mhm.
that I think that might be the one thing to watch. But I know the other thing that I kind of notice on new listings, which you hit on for a little bit, is if you look at our last 3 years, and we've got our line charts, here that we'll always post on the YouTube channel. 2023, 2024, 2025, we never really hit above 2,000 listings in any particular month other than just one time versus like the typical year. If you even look at, 2022 back to 2015, we would usually have like 3 or 4 months out of the year that you would have at least 2,000 new homes, if not significantly more, 2,500, almost 3,000 homes listed in the peak season of the year. We're just not seeing the inventory levels really hit. Now,
Yeah,
do
I to take this,
yeah,
like, what we kind of see going from 2022 and before, half the year you would have listings over 2,000 per month.
yeah,
Half the year, the other half you'd be below 2,000. We've had that happen for the last 3 years for 2 months.
yeah.
2 months. So we're going from, and it's right at 2,000.
18 months versus like 2 months where we're actually seeing those really nice peak season opportunities where there's a lot of inventory available and choice for consumers. We talked a little bit about affordability. I think there's also just like a choice issue here. Now, is this little bit of inventory that we're getting where we're seeing new listings a little bit higher than we typically would at this time of the year? We're also seeing inventory kind of more flatline versus decline. Is this, I know the last month and a half here, we've had better interest rates. Are we starting to see just a preview of more options coming to the market because people who own their homes can stomach a 5.75, 6% interest rate when they've got a 3% mortgage today? I think that's going to be the main thing that we want to track.
Mhm.
The data looks just so similar when you look at the highest level, and it'll be interesting to see does this inventory continue to flatline versus showing that historical sine wave up and down seasonality curve.
Yep. Yep. Agreed.
Yeah. And the other piece, I know I recently dug into the housing summary, which actually compares single family versus townhomes and condos. It also does that price point comparison that we've looked at before. Probably the main thing that I saw recently, specifically in the 53202 zip code, which is like downtown Milwaukee, where most of the inventory is actually townhomes, condos versus single family homes, is we are seeing a little bit more of like a balanced to potentially even a more buyers leaning market in the condo area versus what we're seeing in the single family space. This is something I've talked to a few clients that are considering condos. Right now, we mentioned this earlier, our months of supply is at 2.3 months for all the Milwaukee greater area. That is, 2 months is going to be roughly a seller's market. 4 months of supply is balanced. We're actually seeing that the condo or the condo townhome market is sitting to like 3 months of supply. And I know my deeper dive I did into that downtown area, it was closer to 5 months of supply
Wow.
in 53202. If you're one of the people that's looking to downsize, sell your home into a very competitive single family home space and maybe then move that into a downtown potential condo because you want to be downtown, you want to downsize. This might actually be one of the perfect market timing situations, especially if you're looking at 53202. There's a good amount of inventory out there right now, not as many offers coming to the table. But there's also, I mean, when I say that there's more supply, we're talking about 100 condos, depending on the price point. There's not a ton of options relative to like, we're not a huge condo city, but
Mhm.
if that's something you're looking into, certainly something to dive a little bit deeper in.
Yeah, definitely.
But again, we went through something that's like definitely going to change a little bit of the fabric depending on how investors look at that 30-year versus the 50-year mortgage. Like that is definitely a conversation to have with your real estate agent and probably even a financial planner or some financial advisor, like actually run the math, maybe do some chatting around in AI and say like, am I making a good financial decision here given all my other inputs? Just make sure that you're making the right decision regarding your financing and using your mortgage, your mortgage lender, everybody else. And honestly, let's continue to watch the real estate market here because it kind of seems status quo. We're still seeing good rates of appreciation and nothing too volatile or crazy in terms of new inventory coming.
Yeah. Cool.
Anything else that you have to kind of wrap us up?
No, that's all, man.
Awesome. Well, with all that, we'll wrap it up here. Don't forget, we have our sponsor of today's show, Venture Title. Kayla, Terry, Renee, they're awesome. Make sure you reach out to them for any of your title needs. And other than that, we'll be back again next week with your Milwaukee real estate market update.
Bye, guys.